Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of monthly support and demand. In fact, from here, we can see how in multiple occasions the market got rejected to the upside quite aggressively. And now the market is testing this exact same zone. So there is a possibility once again to see a potential rejection to the upside being created away from this historical level of monthly support and demand. So the monthly time frame is quite bullish. Now, let's drop down on the weekly time frame and see what we have. Well, from a weekly standpoint, the situation is quite clear as well. We can notice how the market has just created this M pattern, and in general, after the creation of an M pattern, what you would expect is a rejection to the upside for the market to go and complete the M pattern at the neckline, so the previous support turned resistance from a weekly standpoint. So also here on the weekly time frame, everything seems quite bullish. We can also notice that from a structure perspective, we can notice how this level here was the previous zone of accumulation from which all this move to the upside started. In fact, here we had a lot of sideways price action. So in a situation like this, you would expect to see accumulation of longs from an institutional perspective. And then the market rejected the level to the upside. And keep in mind that this zone was also inside of the monthly demand and support area that we have just identified, which now the market is testing. So in a situation like this, where the market is just entering once again the same level of accumulation of longs from an institutional perspective, you could expect the same thing to happen again inside of this level, because if institutions were interested in this zone in the past, they should be interested again. And from here, we could then expect a potential push higher. Speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing. Now, if we are looking at the data for the euro, actually we are already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can notice is that with the last reports, net positions have slightly gotten decreased. That is because shorts are still getting added. However, now, longs are starting to get added as well. In fact, if we look closely, we can actually notice how longs went from 175k to 178k. So institutions have now started once again increasing their longs, and shorts, even though they got slightly increased with the last report, they're still lower than the high here at 171k. So there is definitely the possibility, since the market is entering just now inside of that support and demand area, that from here, I wouldn't be surprised at all if the next report comes out with net positions getting increased, because we had 12.2k net positioning, which is one of the lowest levels, as you can see. And usually when you hit a bottom, from there, you start growing again, especially if the market is inside of a historical level of support and demand, as it is in this specific situation. So keeping that in mind, let's move back to the technical side of the market. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. The monthly and weekly are quite clear. Let's go down on the daily and see what we have. Now, from a daily perspective, what we can notice is that this market has just created this overextended M pattern. Now, in general, when you have the creation of an overextended M pattern, what you would expect is a rejection to the upside for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. So in this case, what we could expect is a correction at least to the 0.32 of the Fibonacci taken on the impulse leg, meaning that also on the daily we have a bullish pattern, which increases the probabilities of the rejection to the upside away from the support that we have just identified on the monthly and weekly timeframes. So there is definitely the possibility to see some more institutional longing inside of this zone and institutions to start closing their shorts. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential push higher for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg of this overextended M pattern. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.